All right, this video is a result of a discussion I had in the comments section with one of my channel members who was asking about SoFi and New Holdings and Stoneco and asking about a head-to-head matchup between two of these companies. And I thought, why not do three of them as the member suggested here, putting all three of them together and comparing SoFi Technologies, New Holdings, and Stoneco and answering which one I thought was the better financial services stock to buy. So that's what I'll do in this video, compare these three on revenue, on net profit, return on invested capital, and valuation to determine which one of these innovative companies is the better stock to buy in my opinion. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Start with the revenue on a trailing 12-month basis. SoFi and Stone are very close in this metric. 2.5 billion in revenue for SoFi, 2.4 billion in revenue for Stoneco. SoFi's revenue growth has accelerated in recent quarters, and Stoneco has slowed. It's decelerated in recent quarters. Stoneco has undertaken a more prudent growth strategy, focusing more on profitable growth. The same with New Holdings, they've been focusing more on profitable growth as well. Whereas SoFi hasn't made that distinction in terms of purposefully slowing down its growth, except for the lending side of the business. And it was only for maybe the first 6 months of 2024 because SoFi was more fearful of a recession than most other financial services companies. So it was planning to pull back its lending activities. But as the year progressed and SoFi realized, hey, the economy is better than we expected, they ratcheted up their efforts in lending as well. So lending revenue is going to be a lot better than SoFi initially expected to begin the year. Regardless, all three of these companies are demonstrating excellent revenue growth, with New Holdings taking it away here. You can see back in 2022, they were very close in terms of trailing 12-month revenue. And now you have New Holdings that's roughly 3 times the revenue of both Stoneco and SoFi. Net income is the next metric I wanted to compare these three financial services companies on. And I'm choosing net income on a trailing 12-month basis. And you'll notice New Holdings, $1.78 billion in trailing 12-month net income, absolutely soaring in profitability. Stoneco also has increased profitability, as well as SoFi, accelerating profit growth. And SoFi's management team told investors that over the next 3 to 5 years, they're very optimistic about their profit expansion expectations. And then New Holdings and Stoneco also have excellent growth prospects ahead. Remember, Stoneco and New Holdings operate primarily in Latin America, whereas SoFi Technologies operates primarily in the United States. The Latin American economy is growing. Latin American economies, I should say, are growing much faster than the United States. Of course, they are less developed, smaller economies, and you find usually that the less developed economies grow faster than the more developed economies like the United States. It's much more difficult to grow a $30 trillion economy than it is to grow some of these smaller economies around the world. So in terms of profitability, New Holdings demonstrating the highest net income out of the three, while SoFi demonstrating excellent improvement, perhaps accelerating the growth at the best pace. And then Stoneco, even though it's better than SoFi in terms of total net income trailing 12-month, the pace of improvement favors SoFi in recent quarters, even though it favored new Stoneco prior to that. So these three are all performing well. It's no surprise that I have all three of these rated as a buy in some form or another, whether it's a borderline buy or a full buy rating. I've liked these three companies for several years now. And more recently, I've actually added SoFi as a buy, whereas New and Stoneco I've had rated as a buy for a couple of years, maybe 3 or 4 years. Whereas SoFi, I've only had it rated as a buy for maybe the last year, year and a half or so. When the company really accelerated their profit expansion is when I got bullish on SoFi stock. The next metric I wanted to compare these three on is return on invested capital. And New Holdings has taken a huge leap forward in this metric as well. So both in revenue, net income, and return on invested capital, New Holdings demonstrating excellent improvement, 22% in return on invested capital, 2.15% for SoFi, the lowest among the three, but SoFi demonstrating excellent growth here. And when you consider the earnings per share growth, the profit growth that SoFi is forecasting over the next 4 quarters and the next 12 quarters, it wouldn't surprise me if SoFi takes second place from Stoneco in the next, let's say, 6 to 12 quarters. It wouldn't surprise me if SoFi overtook Stoneco in that metric. I don't know if it will catch up to New Holdings. It's so far ahead, and New Holdings is also growing at a very nice rate in terms of returns on invested capital. Finally, let's compare these three on valuation, and you'll notice SoFi is the most expensive of the bunch, trading at more than 3 times the valuation of New Holdings, and then trading at more or roughly 10 times the valuation of Stoneco. Still, you also have to consider risk, and I highlighted earlier that the Latin American economies are growing much faster than the economies in the United States, but they're also more volatile. They're also more risky. Their regulations are more less established, and lending business is a risky endeavor already. Financial services is a risky endeavor already that requires partnership and collaboration with regulators and following guidelines. And when regulation is volatile, it makes it more difficult for financial services companies because a change in a regulation that impacts your business, it's hard to plan for them when these regulations are changing more frequently and more volatile based on which political party is in office at the moment. So that could justify some of the risk premium, some of the premium valuation for SoFi stock because it's in a more stable environment, a more stable economy, less risky economy. Still, it's trading at almost 10 times the valuation of Stoneco. And we saw they're not that far off in terms of performance. And we can go back and take a quick look here. Return on invested capital, Stoneco is ahead, even though SoFi is catching up. And Stoneco ahead in profitability, even though SoFi is catching up. Of course, New Holdings is the clear leader in all of these metrics. But if you compare New Holdings with Stoneco, that's nearly 3 times the valuation of Stoneco. And I don't feel that New Holdings has earned that 3x premium over Stoneco. And I'm not convinced that SoFi has earned that 10x premium over Stoneco. So if I was to pick one of these three financial services, if I had to pick only one, I should say, of these three financial services companies, I would pick Stoneco, but I like all three of these. But if I had to pick only one, I would go with Stoneco here because of the significantly lower valuation. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.